Welcome back. Oh, fiery conversations, Fiery conversations. Charles Tobin is back with us, agent with AAA Washington. And, Charles, you had some interesting insight on the same topic. I mean, the CEO pay, everybody wants cheap stuff. I want to buy cheap stuff. You want to buy cheap stuff. But there's got to be some social responsibility. And people who, they call themselves patriots, they say they want to be American, yet they really don't care about America or the people who are living here.
Yeah. I'm sure the leaders of the company struggle with the idea of, wow, I could totally get things made cheaper over in China or India or somewhere else than I can here. And so they think of that, and maybe they just get kind of their head wrapped around that.
Well, the shareholders want more money too. So
it's a dilemma.
It's a dilemma. Yeah. It's a dilemma, Charles. Well, let's really talk a little bit about another dilemma people have that maybe it isn't. We could actually help solve this problem here in the next few minutes.
Yeah.
Charles, you've been with AAA Washington for a long time, and car insurance is one of those things that everybody should have, or most people have, unless they. Actually, we learned
it's required by law to have. Yeah.
Or you can have a little card that says you have enough money in like a little escrow account.
As we learned.
Really?
Yeah.
Huh.
But
50,000.
Most people need car insurance, and so let's talk a little bit about car insurance and what are some big questions you get on it.
It ranges. Every day it's different, but some of the most common ones are. My neighbor pays this amount, so I should be paying the same thing because I have the same kind of car and I live right next to him.
Do people really talk to their neighbors about car insurance?
Everyone. The other one is coworkers. Hey, my coworker, got this.
Just got a great deal.
Yeah, and it's great for referrals and word of mouth, but everyone is different because there's so many factors that go into the rating process. Where it's your age, it's your insurance score, which is based off your credit. It's the kind of car you drive. It's whether you own or rent a house, or whether you're married or single. There's so many different factors. So it really depends. And that the interview process is essential to find all that out so they can give them a good quote. So,
the quick quote is just, it's that garbage in, garbage out mentality.
Yeah. Yeah. But, at least they called and they're fishing for a quote. So you just kind of have to steer them in the right direction and educate them. Hey, this is what I need. This is what it will be like every time you get a quote. There's no easy numbers.
I had a question. Sorry, I was I was telling you earlier that I recently switched policies, and one of the reasons I couldn't get a lower cost was my lack of credit history in terms of my age affecting my credit score, not anything that I've ever done wrong.
It could have been insurance score. That's what I always call it. And that's what it is in the industry. Every company has a different insurance score, and then they put it into different tiers where you fit in based on your age and a whole bunch of different algorithms, I guess. The actuaries come up with this stuff. I have no idea how it's figured out, but every company has a different score, and if you fit best with one company, then go that way.
So, that becomes the hard part. Now, you guys can do insurance with lots of different companies, which helps because if you go to a company that sells their own stuff, that certainly makes it more difficult to shop it.
Definitely. You just have one product, and that's, all you can do is just struggle to maintain it, and whereas AAA, we have different companies, and if it doesn't work out one year and rates go up because the company had an increase, then we can shop it around for you.
Do you feel like people should shop every year? Should they be contacting you every year? Do you think, is that something you do for your clients every year without them asking?
I've been trying to more because every company's been having rate increases. It seems like every company. So I've been trying to stay in contact, but it's sometimes very, very hard to do that. I would like to do a better job.
Well, I'll tell you, but I know in the mortgage business right now, we call our clients, hey, you can save money on your loan. We just reviewed your loan. Your rate is too high. People are so busy and they don't want to be sold anything. So there's this inertia you're almost fighting against. And I think that's something that I think a customer or a client has to determine if that's something they want in a professional, somebody to keep up with them or not. Mm-hmm. Because it's always a call that can be made, but it's not always received well on the other end, even though you're trying to help.
Yeah, that's true. Definitely the cold call, if you will. But it's still
not really
your
cold.
Client,
it's your.
Sometimes you feel like it is because they're like, oh yeah, sure. What are you calling me for?
So when somebody starts looking at the cost of their insurance, then with you, what are some of the biggest premium changers that you see? Why do people's insurance change? You talked about Of course, if they're going to get tickets or big car accidents or, drunk driving or things like that, I imagine are big ones.
Yeah, lately it's been the rate increases that companies have been taking. I guess I can kind of talk nationally about what's going on. I mean, you know the storms last year. I think in one of your shows we talked about
the
Joplin
tornadoes.
Mm-hmm.
The massive snowstorm over in Massachusetts the last year or so ago, the hurricanes, all that stuff adds up, and some insurance companies saw some record losses last year, and they're going to probably start raising rates throughout the country because they're national companies and they have to get the rates somewhere. So we're going to see a lot of increasing rates still to come.
Well, see, now there's a place I could see that it was not the CEO's fault. When a big tornado hits.
Yeah, insurance, they're always, people think they're loaded and they have all this money and, but they're trying to get money so that they can pay for that eventual loss that is down the road. And they all plan for losses, but last year's losses were pretty catastrophic.
We're here with Charles Tobin with AAA Washington, and you start talking about those catastrophic losses, but on a small scale, that's what people are protecting themselves from, is what can be catastrophic.
Yeah.
For themselves. So,
Yeah,
you have to put yourself in that position of how do people kind of protect themselves as well, right?
Mm-hmm. Yeah.
So how do you end up helping make sure that people are effectively protecting themselves? Year over year, whether you have, in the questions they ask.
It all comes down to, have they, I guess if I picture a client I've had for several years, have they, has their lifestyle changed? Do they have kids? Do they have a second kid on the way? Maybe they need more life insurance, or maybe they need to get an umbrella for, extra liability protection so they don't lose their assets. Maybe they bought another house and they're renting out their old one. So I guess staying in touch is very helpful and kind of getting to know your clients through the years. And
what about when people let other people, use their stuff? So, driving their car, can that hurt their insurance as being a good friend?
Yeah, it could if that person has an accident, because insurance, this is actually one question that happens all the time. Can I have my friend or my family member who's visiting town staying with me, can they drive my car? Will they be covered? And I say, yeah, of course. As long as you give someone permissive use to drive your car that's insured already, your insurance pays for the loss. So just picture your friend driving your car and totals it. It's your insurance that's going to pay out that claim.
Well, they're going to at least pay the deductible.
Yeah, you might want to have your friend reimburse you for the deductible.
And the next 12 years of higher car insurance.
Yeah. Well, actually, the surcharge would follow the driver.
So there you go.
Yeah.
So the coverage would be on you, but really the long-term cost is going to be on them.
And your insurance company might look at that and say, well, I don't know if we want to insure you next year because you let your friend drive your car and he totaled it. But that's if you just chopped and changed to a new insurance company and you don't have a long history. A whole bunch of factors.
Do insurance companies drop people very often?
I've been seeing a couple lately, yeah.
Really?
We had one in a different office, not mine, that they bought auto insurance and 4 days after that totaled their car, hit another car. It was like $100,000 in damage. And that same company, since it's within the underwriting period of 60 days, said, sorry, see you later.
Wow. But at some point, I'm guessing someone becomes uninsurable, but yet it's required by the state of Washington to have insurance. So does that person just end up paying who will take them for X amount, whatever they have to?
Yeah, that's why there's over 300 insurance companies, because there's always
someone that will take you.
Yeah, there is. Yeah.
Well, that's good. That's good, especially if you have to have it.
So if you have 5 accidents, there is a company for you.
Charles, what about older cars? Somebody has an older car and they want to insure it. Does that change the value or the cost?
Yeah, that's another common one. A lot of people compare, I just got a newer car. It shouldn't be as expensive as my older car. Or no, it's the other way around. They think that the older car shouldn't be as expensive. But what if you had a BMW versus maybe like a Chevy or a Toyota, something that's a little bit cheaper to repair than a BMW? Because we all know that BMWs, Mercedes, the German cars are kind of expensive. It's all based on loss ratio, which is an insurance term. But if it costs more to repair, it's going to cost more to insure. So an older car doesn't always necessarily get you a cheaper rate.
Well, and a lot of it also has to do with, the safety of the newer cars, I would imagine. You're
Yeah,
less
that too.
prone to be hurt in a brand new Mercedes than you are in an 82 Chevy.
Yeah, I guess how well they hold up in a wreck. If it's not damaged as bad as the other car. Maybe
Well, or
get a
damaging
better rate.
people.
Yeah,
Damaging
that too.
people.
Yeah, well, I was thinking of the car too.
They go hand in hand.
Yeah.
Charles, we're going to go to break. But
All right.
thank you for joining us. It is always interesting to find out how much it's going to cost to insure you and your car. And, in a time when everybody's trying to save money, you still got to make sure you do it right, especially when it comes to insurance, because it's your catastrophe that you're really trying to insure yourself for. Ladies and gentlemen, I'm Ben Brash, and you're listening to Brashenomics. We're going to be right back after this break. Laura Leist joins us, the author of 8 books, past Puget Sound Business Journal's 40 Under 40, and she's got information you don't want to miss about eliminating some of the chaos in your life. You're listening to Brashenomics.